All right, good morning, everybody. Can you guys hear me okay? I just realized I didn't hit the go live button, so I just spoke with myself for about 5 minutes. If you guys can hear me, please let me know quickly if the audio and visual is working for you. Sorry about that. This tool we have here means I have to select the date but also have to hit the go live button, which I didn't do until just a second ago. So anyway, sorry for the delay. AV is good. Cool. Very good. Okay. Well, let's get started. First of all, there's a question here. Before we get started, there's a question about the year-end rally. What happened to the year-end rally? Well, I don't know for those of you who've been here for a while, I've been talking about this now since basically the 1st of October, that I said the most crowded trade that I've seen in a long time is the belief that we're going to get some miraculous, Q4 rally. Now, stocks are up in the fourth quarter, but it's a very crowded trade and crowded belief. So I've been saying this now daily since October, early October, so all the way through October, November, and now the fourth quarter rally thing is, to me, one of the most crowded trades I've ever seen. Doesn't mean we can't levitate, but there's so much belief that we're going to get a rally just because we get a rally because of the fairy tale of seasonality, which is a bull market phenomena, it stood very little chance of really coming to fruition to the extent that people thought, particularly those people that were yapping about Bitcoin 250,000, by year end. I mean, that's just laughable, right? Particularly once we started getting into bullish momentum, which we had from a momentum perspective. So a lot of times these forecasts and beliefs are largely based on narratives and linear thinking as opposed to reality. That's why we differentiate between trend and momentum, and I think that's a very important thing to do. So let's talk a little bit about what we're going to go through here today. I want to quickly update people on what's happening this Friday, which is triple witching options expiration. And then I do want to basically focus on NVIDIA. And we can look at Microsoft too, but I want to give everyone a bit of perspective, so we'll keep it a bit shorter today. We'll try to keep it to 10 minutes since I, silly me, basically, and without hitting the live button, spoke to myself. Okay, so quickly, let's talk about Friday. So Friday was something called triple witching options expiration, which basically means a lot of the options for the month of December, the monthly ones that are futures and stocks and stuff like that, are going to expire. Okay, and so that can levitate the markets a little bit into that. But it is not impossible to think that we are going to start to see a little bit more weakness starting next week. Again, I don't have a bet on this, but that's actually why I'd like to share with you guys what's going on with NVIDIA right now. Now, before we get started, let me just quickly remind you, we have a weekly educational session. And this week's educational session focuses on momentum, which is actually what I'm going to show you here in NVIDIA. We have bearish momentum on NVIDIA. That's not something you can hear a lot on the financial TV stations right now because they have to still sell you more ETFs. But if you do want to learn how to trade momentum, what you want to do is join us here today. It's completely free. This is our weekly educational session. It's going to take place today being the 16th of December at 11 o'clock Eastern. So that's 8 o'clock Pacific. So if you want to learn more about momentum trading. Also, by the way, we have a brand new ebook that we just released, which is we call it Rethinking the S&P 500, which basically looks at the S&P 500 as an index for 2026 and probably a few years beyond. So if you are interested in that alone, make sure you register for the webinar. This is just our weekly educational series. We call it Strategy Session, and you'll get that ebook along as well. So just giving you a bit of a sweetener on that as well. Okay? So let's get started and look a little bit at what's going on with NVIDIA. We actually touched on it a little bit yesterday, but I'd like to share with you a couple more things here that I believe are really important. First of all, if you look at this part here, this is the sector movement yesterday. This is the sector movement yesterday of the equity sectors. And you can see that the technology stocks were down about 1% yesterday. So, but healthcare was up 1.3. So between tech and healthcare, that's a spread of 230 basis points, percentage points plus 2.3%. That's a pretty big spread. Now, it's important to understand that about 30 or 40% of that was actually due to just a couple stocks, one of them being NVIDIA, the other one being Microsoft. This is an age-old thing. We've talked about it for a long time. An age-old thing. We've talked about it for the past couple of years. We've now had this very significant market cap concentration. Now, before we look at this a bit more smartly, let me just point out a couple things. If you were to just purely look at NVIDIA from a technical perspective, which I always warn about is a great way to lose money in other things than bull markets, right? So make sure you have a repeatable process that looks at more than just charts. It's important. Charts are important, and it's a large component of what we do, but you do have to understand the macro structural environment. Otherwise, it's very, very difficult over time to make money outside of linear bull markets that are driven by 7 or 8 stocks, right? And we believe that's over. In fact, we believe 2026 is the year of the great rotation. We actually just coined that term for next year just early this week, actually yesterday. And so you'll hear a lot more about that as we start rounding off the last week or so of this year, and then, of course, going into January. But if you were to just look at NVIDIA from a technical perspective, and again, I warn it's an oversimplification, but it is there, right? There's very little people talking about some sort of a near-ish term, multi-week, multi-month head and shoulders pattern. If this were to come to fruition, I should also point out, by the way, that NVIDIA has done absolutely nothing since late July, right? And NVIDIA did nothing up until basically May, and then rallied for 2 months, June and July. So if it wasn't for June and July, NVIDIA would now be flat on the year, right? But it's up 30% because of 2 months. Now, that's neither here nor there. I'm just showing you that all the concentration of the rally happened basically because of the data center build-outs and everyone getting excited about new data centers getting built. Outside of that, NVIDIA would be flat, and it is flat since July. So if this head and shoulders pattern were to play out, and again, this is just one part of the analysis, we're going to get much better on this in just a minute, we could draw this head and shoulders thing, right, which is, I call it, first grade doodling, and then we could measure from the neckline. We call this horizontal line a neckline. There's the two shoulders, and then you have the head. If I were to see what a profit target might be, I could literally take the distance of the neckline and add it to the distance from the neckline to the top of the head and add it down here. So you would, if this were to play out, it's a big if, right? And I don't have a trade on this just yet. But if this were to play out, you could see about mid 130s in NVIDIA, which would be about a 35+% drop from peak to trough. Again, remember, this is educational. There's no recommendations giving here. I'm just trying to give you something that I hear no one talk about. Now that we've doodled like first graders, let's get a little bit smarter and see what else we can do. First of all, let's understand where NVIDIA is from a trending perspective. So trending is sort of your multi-quarter kind of sort of time frame. And you can see that NVIDIA, despite being flat, it's actually still in a bullish trend. What does that mean? It basically means that if I have long-term positions, I shouldn't dump them all. I might clip and do some risk management, which is always a good thing to do, but it's not an outright sell signal, right? So the stock is still in a bullish trend. So from a long-term perspective, right? So it doesn't mean sell every single share of NVIDIA. And by the way, just so you know, everyone that has the S&P 500 as a benchmark has to own NVIDIA because it's like 8% of the damn index, right? Now we've given you this perspective. What about the near term, which is typically what most people are trying to focus on right now? So from a near term perspective, you will notice that NVIDIA, and this is now momentum, and this is what we're going to talk about this week in our educational session. So if you want to sign up and join us for that session today, it's totally free, as I mentioned. We'll teach you about momentum. And NVIDIA, you can see, has been in a bearish momentum move since November 17th. Now, today, of course, is December 16th, actually. So for 1 month now, it's been in a bearish momentum move, right? Now, the stock hasn't fallen apart, but it is still down about 5% since there. So there's some leeway here that the stock might be able to bounce up to 180, 184, 185, but there's a lot of pressure here from a short-term momentum perspective on NVIDIA. Right. So again, we have an oversimplification of a charting analysis here by this head and shoulders doodle that we did before. Much smarter is understanding the trend, right, with a trend following algorithm, and then finally understanding momentum. Momentum is bearish, and so we like the idea of being careful here on NVIDIA on the long side. So I thought I'd give you a little bit of an update on that. I want to leave it at this. So I know we're going to, which is a really quick 10 minutes today. Hopefully this is helpful to give you some idea on what's going on with NVIDIA. Again, it's important to do our own work, to have a repeatable process, as opposed to just blindly following someone's amazingly bullish, linear bull market calls, and then getting completely neutered when the talking head on TV is wrong, which happens all the time. So do your own work. If you are a Market Rover member, we are going to continue this conversation in about 5 minutes or so, and we look forward to seeing you guys there. And again, if you have access to this link here, it's in the chat box. You can join us in our educational series, which this week again focuses on momentum. And by the way, I'll talk about NVIDIA, Tesla as well, which actually maybe I'll quickly show you this. You might notice that Tesla had a rally yesterday, and everyone was talking about the breakout. Now, I will tell you, and we'll talk about this at 11, that our buy signal, our momentum buy signal, actually came on the 3rd of December, not yesterday, right? So that would have allowed us to capture, that allowed the signal to capture a full 6.4% of the move, or 3, 4, 5x that with options. If you're chasing breakouts based on linear breakout things, most of the time it falls under the category of chart chasing, and you're just too late. One is too late. But if we have a smarter signal that typically detects before the breakout happens, it just becomes a much higher probability game. So we'll talk about that at 11 o'clock Eastern. That's 8 o'clock Pacific today as well. Okay? That is all I got. If you have any questions, let us know. And again, we'll see you guys at 11. And if you're a market, remember, we'll see you in about 5 minutes.